But so in this video, I'll be teaching you guys how to backtest the strategy I use, which is supply and demand, right? Backtesting basically just means practicing the strategy, right? Putting in your reps, your repetitions, your drills, your training. So like that, when you come into the live market and the market is live, you already have your backtesting knowledge of being able to recognize these patterns, and now you're able to apply it in the live market, right? So if you learn how to backtest and practice the strategy, right, that I taught in my program, then you could now see and recognize these patterns in the live market. So like that, once you do start trading, and you are trading in your session, you are trading in the pairs that you trade, you are trading in the session time frame that you trade, then you will be able to easily recognize these patterns, execute the trade with no hesitation, because you already backtested and you already practiced the strategy so much and so many times that now you could come into the market live and see it play out. Or if you see a strategy, you see your edge, you know when to get in, when to get out, you know how to spot it, right? And the beauty about backtesting is that, it doesn't require no money, right? You just replaying back the time, right, the chart, and basically just looking for your strategy, looking for your edge in the markets. So like that, you simulate if you were trading live that day, right? And that will basically just get you better. That training will get you better at spotting the setup, learning that strategy, and not being scared to execute, and it just builds your confidence with the strategy, right? And the good thing about backtesting as well is that you could backtest a whole year worth of trades in just one day, right? So that will give you like a whole it will give you like a immense practice, instead of you having to wait for the charts to open on Monday and trade and then get that practice live trading. You could just backtest and get that practice and trade for a whole, like you could have the whole month of December, trade the whole month of December from last year backtesting, and you would have saw how many times you would have won, how many times you would have lost, etc., etc., right? So this will just show you, how the strategy works, how to get better at spotting these setups using that edge, and just build your confidence, right? So right now we're in NASDAQ. This is the 5-minute, and we're gonna backtest. We're gonna go into replay mode. If you got TradingView, I highly suggest you should get the subscription so that you have the replay mode option. Let me see, start new, and we're gonna go to a random bar. We're gonna have price, well, just put us in a random bar. Let me see, let's go to another one. Okay, so this is November 7th, 2023. So I don't know what price was doing November 7th, 2023, but we're about to back test at least a week of it, and we're actually gonna go one more day back. We're actually gonna go one more day back to start of the week on Monday. So this is Monday, November 6th, 2023 on NASDAQ in the 5-minute, and we're gonna backtest using supply and demand and see if we see our strategy, we see our edge, and then we're gonna take trades. Well, not real trades, but we're gonna take these simulated trades to practice our strategy and see what the outcome would have been. So like that, like once you actually hop into the markets for real, you're not scared of taking a loss. You're not scared of seeing price go into profit, because you already practice it so much. It's like you already shot from the 3-pointer so much that once you're in the game, it's just natural. Boom, boom. You know what I mean? So that's what backtesting does. Like I said, it builds that confidence. So right now, I'm not seeing no setup, right? Let's see. I'm not seeing no setup. Okay, right here. This would have been a demand. Like right here, I saw this. Seems like this was news. Right here, this would have been a demand, right? But price came up with this next candle. Price came up, hit the zone. Price came up again and came down, hit the zone, and then the next candle broke the zone. So this would have not been a valid trade. So we just wait for a better trade. And that too, we only want to trade crystal clear setups. And also this little shaded area is the trading window that I'm trading on. I'm only trading from 7:30 in the morning to 11 in the morning. That's the little window time frame that I'm looking for trade setups. And if I don't see no trade setup in that window time frame, then I'm out. I move to the next day. And also, you want to back test on all the pairs that you trade. Like for example, I trade Nasdaq Gold and JBP USD. I back test on all those 3 pairs, and we back tested on the 5 minute, because that's where most of our setups are coming in at, like that time. Right, so right here I see a little, you got 3 MAs under, I see a little demand setup right here. Boom, we got a little gap right here that needs to get filled. Right, let's see what would have happened. Price is coming down, price came up, right? We see a little uptrend, price came up, broke this high, kind of broke this high a little bit too. Then we see price reject or pull back, then continue pushing up, breaking this high, this recent high, right? So it's on an uptrend. So right now we're just waiting for price to come back down, fill in this gap, touch our zone, our demand zone, and we're looking for entries. Let's see what would happen. Okay, bet, no trade. Sometimes price will do that. That's cool. No trade. Okay, right here, this is the New York Stock Exchange open. Nah, that's 9:15. That's not even the New York Stock Exchange open. But let's see what would happen. There's another demand right here. Price will grow. Oh. Okay. Alright. So, I should have left that zone there. So the zone ended up getting hit. Right here. This was it. This. Well, if I go to the 15 minute, let me see. Yeah, if I go to the 15 minute, this is the whole zone right here. Bam. That ended up getting hit. Right. So now, next break of candle. The next candle that breaks this candle high, I'll be getting in for buys. No if, ands, or buts, bro. But we in that shit. Let's see what would have happened. Boom. Okay. Price broke it. ASAP. 1-to-1 got hit. Well, 1-to-1 almost got hit. Nearly almost got hit. So let's see what would have happened. Next candle open. Okay. Price came back down. Let's see. Boom. 1-to-1 got hit. From there, we close out partials, close out half the trade, put stop loss at break even, and we're waiting for 1-to-2 to get hit, which is our second target. So right now, once our 1-to-1 got hit right here, right around this area, I already closed out half the trade, so I'm already in profit. Now if price comes back down to my entry point, stop loss is at break even. So if price hits my stop loss, I'm not gonna lose no money, and I already secured money, right? And I still have a running position there. So if price does keep going and doesn't hit my stop loss, I'm making extra, which this is what's happening right now. So price didn't hit my stop loss, it kept going, hit our 1-to-1, I secured profits, moved my stop loss to break even, and now we're just waiting for price to hit our 1-to-2 target, our second target, with our last remaining trade position. Boom. 1 or 2 got hit, I would have got out the trade. So this would have been a pretty easy trade right here. Boom. Right? There's a pretty easy, simple trade. And 1, 2, 3, 4 candles, that's in 20 minutes. In 20 minutes, you could have potentially made $600,000, $6,000, $60,000. It just really depends how much you're risking and big your account size is, right? So that's one trade. Let's see, price would have probably kept going. Hell yeah, should would have kept going. You would have caught more if you would have hold, but I'm only looking for 2 times my risk and getting out the trade, because most of the time price will not go, well, it will go 2 times your risk, maybe 1 times your risk, and it might hit your first target, it might hit your second target, and then reverse, and then come back all the way down to your entry point or to your stop loss and hit stop loss. So that's why you just want to secure profits at those 2 targets, and you could leave an extra running position if you want. But me personally, bro, I get 2 times my risk. If I'm risking $10 and I make back $20, I'm out the trade. I'm calling it a day. I'm not being greedy, because I've been there already. I've been there being greedy. Right here I see a demand setup. Right, we see price going up, down, up, breaking these highs. So it's going on an uptrend. Right now we're waiting for price to come back down to this demand or this little demand over here. Let's see what would happen. Well, basically this whole zone is a demand right here. Mainly over here, but yeah, that counts too. Let's see what would happen. Boom. Okay, price hit our zone, rejected off of it. Now next candle break, I'm getting in for buys, bro. Let's see what would happen. Boom, I'm in for buys. First target is 1-to-1. Okay, this might be a loser. Ooh, yeah, we lost. Stop loss hit. Okay, that's cool. Price seems like it's coming down and filling this gap over here. Let's see. I would have probably got back in this trade, not gonna lie. I would have got on like right here at this break of candle when price came down, rejected off of it. But it's just sketchy, honestly. But this would have been a trade that probably played out. Let's see. Yep. See, it played out. You just had to be patient and wait. But I would have got in on the first break of the candle, and I would have probably got stopped out. I would have most likely got stopped out unless I had my stop loss all the way under the zone. Right, I had my stop loss. My first stop loss was like right here underneath the wick. But if I had my stop loss all the way under the zone, which is a way bigger stop loss, then, you know, we would have still been in the trade. We would have caught our 1-to-1, and we would have caught a 1-to-2, right here. Right, so that's how you start back testing and start analyzing the markets. You start seeing what you could have done, what you should have done, what would have happened, right? And you start picking up little tricks and just patterns that you see repeatedly, right, in the market. And that's how you start analyzing your data and your strategy and seeing if it works or not. But you can see clearly it works. Like we just won 2 trades in a row. This one I would have got stopped out. I would have probably got back in because my stop loss was so close, and I got stopped out, and then price started rejecting, and look, it would have been a winner. But it's cool. It happens. So let's say, you know, I would have taken a loss, I would have taken a win and then a loss. That's cool. My first win, it was 1-to-2. So I would have made, like, let's say $20, and then I lost 1, so I lost $10. I'm still up $10 for the day, or for the week. Let's go to Thursday. That was Wednesday. Let's go to Thursday. Okay, let's see what November price action was. Kind of iffy. Okay. Oh, whoa, 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 whoa. Too fast, too fast. So right here, I was looking at this. I was waiting for price to break these highs, but there's this little high right here that got broken into, right? And price, this is a demand zone right here. Boom. Why? Because price came down, came up, came down, came up, breaking these highs, came down, rejected, came up again, aggressive, right, with these bullish candles right here that are printing, you know, pretty up, aggressive, whatever, right? So 3 MAs are lined up. Price broke this high. It still hasn't broken this high though, but this is a level that we could potentially reach up to and look for our exit target or take profit to be this level, right? And now from here, we just wait for price to come back to our zone, which as you saw it did. Boom, next break of candle, we're getting in the trade. Bam, price hit our zone, stop loss underneath the wick. We're looking for a 1-to-1, like right here. So this is our 1-to-1. We see that this is the resistance. And let's see what would have happened. 1-to-1. Okay, we're still not in the trade. Price created. Okay, boom. So now our entry is off of this candle, not off the other one. Still 1-to-1. Boom. Okay, we got in the trade. This is 8:45. Right now we're in the trade. 8:45. We're in the trade. Let's see if a 1-to-1 gets hit. Okay. Let's see. Boom. 1-to-1 got hit. This would have been a very iffy trade because why? Price came all the way up here, started rejecting kind of off this zone, this area, pulled back to break even, pulled back to your entry point, and then took off all of a sudden at 9:10. Hit our 1-to-1, close out partials, right? Close out half the trade. You already won for the day, and then go to hold the rest of the position if you hold in the rest of the position to your second target, which will be a 1-to-2. And let's see what would have happened. Oh shit. Let's see what would have happened if price would have hit our 1-to-2 target or not. Ooh, nah, we would have got clapped out at break even, right? Because that's why you want to close out partials at 1-to-1, secure profits, at least half the trade or 80% of the trade at 1-to-1, and put your stop loss at break even. That way, like I said, I keep repeating it, but this is really what made me profitable. You make money at 1-to-1. You secure profits at 1-to-1. Then you close your risk. You put your stop loss at break even. So now you're not risking no money. You already made money because you secure half the trade. And you still got a running position. So if price keeps going, you make the best of that winning trade. You maximize the most of that winning trade, right? But as you can see right here, New York Stock Exchange open. Well, yeah, New York Stock Exchange open and price came up, almost hit our second target, and then dropped down and hitting our stop loss at break even, and then going down, breaking the zone, etc., etc. All right, so that's that. Let's do Friday. I normally don't trade Fridays, right? So I don't backtest Fridays, but let's do Friday. Friday usually do fake outs, but we'll see what happens. So this is Thursday, and we'll see what happens on Friday. This is the last backtesting day that I'm gonna do, just because I just want to like just break it down how it works, explain to you guys how backtesting helps. It just builds that confidence, because like, yo, I backtested so much, bro. Like, bro, there was this one time I backtested for like 5-8 hours straight. Oh, John. And it's like, bro, like at this point, I know the strategy at like the back of my hand, and I don't hesitate once I see my trade set up. I don't hesitate to get in the trade. Right? As long as I'm risking the right amount that I need to be risking on the trade, 2%, bro, I'm good. Bro, get me in the trade. Right here, we got a demand set up. 3MAs are kind of lining up. They're still not lined up correctly, but right here we have a demand set up. Let's see what price does. Okay. Price is like skipping that. Let's see. Okay, right here we have another demand setup, which I like. Price kind of came down. Let's see, did it touch it? Ooh, it barely touched it. To be honest, 3 MAs are lining up. Price nearly touched our demand, but it didn't touch it. I would not get in this trade because it didn't really touch the demand, but it looks pretty valid, right? All confirmations are there. We got break of structure, price coming back to the zone, didn't touch the zone, 3 MAs are lined up, price breaking candle highs, but guess what? It's fake out Friday. So if you would have got in this trade, it could have played out and you would have made money, or you would have got faked out. So let's see what would have happened. Let's say I put my stop loss right here. Boom. First target, 1-to-1. See what would have happened. We're already in profit. See, fake the fuck out, bro. So that's why we don't trade Fridays. But let's see. Right here we still got price touched our zone now. So now I would have been like, okay, I might take this trade. Price just touched our zone. Only thing I don't like this rejection candle. Price broke the candle high. 1-to-1. And probably I would have put my stop loss maybe a little bit closer to the end of the zone, just in case I see price coming to the zone, like to the end of the zone. Then I know, okay, price most likely break the zone and my stop loss is gonna get hit. So I'm not surprised. But let's see what would have happened. This would have been the actual entry, right? Price touched the zone, rejected off of it, and broke the candle high. So we would have been in the trade already. Let's see what would have happened. Okay. Boom. 1-to-1 hit. Hey, sometimes Fridays it works out, sometimes it don't. Me personally, I don't like trading Fridays. There's a lot of fake outs. Right? So 1-to-1 hit, same thing. Close out half the trade, if not 80% of the trade, and then hold the rest of the remaining position to your 1-to-2 target. Right? So right now I close out half the trade, I put my stop loss at break even, and we're holding the rest of the trade position to our second target. I already made money, we already won. The market can't take our money back because we got our stop loss at break even, and we're maximizing the most out of this winning trade. See what would have happened. Boom, 1 or 2 got hit. You could have closed out right there, or you could have kept holding, maybe get a 1 or 3. Wish it would have been like 1 or 3 would have been like right. This is like 3 times our risk. 1 or 3 would have been roughly around here. Let's see, but let's see if our 1 or 3 would have got hit. I mean, probably would have. Yep, it would have got hit. But guess what? This is outside of our trading session, so I would have been outside the trade already by like here, because this already by 11. I'm already done for the day. So I would have definitely closed out most of my trade, if not all of it, at 1-to-1 by 11, because that's the end of my session, and then I would have hold the rest for a 1 or 2 right here, which would have got hit on the very next candle after our session closed, and we would have been set, bro. We would have been set. That would have been an easy winning day. But I don't trade Fridays, so that's cool. I think I can delete all that right here. Bam. Yeah, so that's it for this video, guys. That's back testing for you. That's practicing the strategy, supply and demand, how I trade it. And that's me putting in some reps, me putting in some practice, some training, so like that when the market opens on Monday and is live, I'm able to easily identify these confirmations of my edge and my strategy and execute with no hesitation and make some money, bro. So that's it for this video. Till next time.